fear on the floor of the New York Stock Exchange as investors worried the country is in the midst of an economic crisis unlike anything seen in decades.
Markets around the world are coming off the worst week since the crash of 1929. Finance Minister...
In 2020, an unprecedented pandemic caused a global economic crisis. Before that, the world also experienced a crisis in the crash of 2008. Major investment firms failed, housing foreclosures skyrocketed, and millions lost their jobs. The government played a unique role in both the cause and reaction to that crash. Have any lessons been learned? In 2008, John Allison was CEO of BB&T, one of the 25 largest banks in the country.
This morning at the opening bell, the Dow took a steep dive in what seemed for a time like near panic selling.
Hello, everyone. Welcome to the weekend edition of Markets Around the World. I'm K2, and today we have exciting news and data to cover. We'll dive into the latest updates, key macroeconomic trends, and crucial levels to watch. We'll discuss job data, the Tesla controversy, and developments in the bond market and macro data. Plus, we'll touch on the ongoing conflict between Israel and Iran. If you're passionate about the markets, don't forget to subscribe and stay informed on global market trends. Let's jump into the top headlines driving the markets. Israel launched pre-dawn airstrikes on military targets in Iran Saturday, in response to Iran's earlier ballistic missile attacks. This marked the first time Israel has openly targeted Iran. Iran's foreign ministry asserted its right to self-defense, with Foreign Minister Abbas Araghchi stating there are no limits to defending Iran's interests. However, Iran's military later hinted that a ceasefire in Israel's Gaza and Lebanon offensives might take precedence over retaliation. In 2024, traditional relationships between stocks, bonds, currencies, and commodities like gold are breaking down, leaving even financial professionals puzzled. The lingering effects of 2022's inflationary wave may be partly to blame, as bonds and stocks sold off together that year. While bonds briefly resumed their defensive role in August, the typical relationship between stocks and bonds hasn't fully returned. With various forces at play, strategists are finding it difficult to pinpoint the cause of these disrupted market dynamics. Political betting markets are gaining attention, as Wall Street investors look to them for guidance in the tight presidential race between Donald Trump and Vice President Kamala Harris. Rising odds of a Trump victory have influenced stock market bets, fueled a bond market sell-off pushing Treasury yields higher, and contributed to the US dollar's October rally. Tesla's stock surged after posting stronger-than-expected third-quarter profits and offering promising updates. Shares jumped 22% on Thursday, followed by a 3.4% rise on Friday, marking the best two-day stretch since February 2020. One key driver was Tesla's automotive gross margins, excluding regulatory credits, which rose to 17.1%, beating the 15% consensus. However, this was boosted by $326 million in catch-up revenue from full self-driving updates. Without it, margins would have been 15.6%, still above expectations. Investors also welcome news that Tesla is on track to launch a sub-$30,000 EV in early 2025, likely a modified version of an existing model. Gold performed modestly during periods of falling interest rates, slower economic growth, and declining inflation, such as from 2001 to 2003. After the dot-com bubble burst and 9/11, the Federal Reserve cut interest rates from 6.5% to 1%, while inflation dropped from 3.4% to 1.6%. During this time, gold's price rose about 30%, from $270 to $350 per ounce. However, the deflationary environment and sluggish growth created mixed pressures, tempering gold's gains despite lower rates. Now let's take a look at some data I want to share with you all. Central banks now hold 12.1% of global gold reserves, the highest level since the 1990s. This percentage has surged this year, more than doubling over the past decade. China, India, Turkey, and Poland have been the largest contributors to central bank gold purchases. Gold now accounts for 5.4% of China's foreign exchange reserves, reaching a record 2,264 tons in 2024. Meanwhile, gold prices have hit 35 all-time highs this year, rallying 33%. Global central banks continue to increase their gold holdings. US credit card debt has reached a record $628 billion, with unpaid balances rolled over monthly. Over the past 3 years, revolving balances have surged by $204 billion, or 52%, as average interest rates spiked from 15% to 25%. Meanwhile, prices have risen by around 20%, driving higher credit card spending. With $2.3 trillion in excess savings depleted, consumers are increasingly relying on debt to cope with record-high prices. Continuing jobless claims jumped to 1.9 million for the week ending October 19th, the highest level since November 2021. Over the past 2 years, the number of people receiving unemployment benefits has increased by 500,000. Continuing claims are now 19% higher than in 2021, 2018, and 2019 for the same period, despite initial jobless claims falling by 15,000 to 227,000 last week, as Hurricane Helene's impact eased. Meanwhile, the 4-week moving average rose to 238,500, the highest since July. Finding a job is becoming more challenging. Even as the Fed pivot was delayed countless times, we remained bullish. The reason for this is that the hope of a Fed pivot is all the market needed. Even now, the Fed pivot is being delayed again, but markets are still rising. Getting ahead of this trend was important. Now let's take a look at S&P 500 heat map top performers. NVIDIA, plus 2.56%; Microsoft, plus 2.39%; AMD, plus 0.17%; Tesla, plus 21.97%; Walmart, plus 1.48%; Amazon, minus 0.61%. Underperformers: Johnson & Johnson, minus 2.57%; Eli Lilly, minus 2.75%; Pfizer, minus 2.44%; Visa, 3.06%; Berkshire Hathaway, 2.32%; American Express, 3.41%; Energy, ExxonMobil, 0.43%; Chevron, plus 0.04%; Industrials, General Electric, 7.01%; Lockheed Martin, 8.09%; Real Estate, Prologis, 5.70%; Digital, Realty, plus 1.39%; Communication Services, Alphabet, plus 1.18%; Verizon, minus 5.93%; Meta, minus 0.56%. The Fear and Greed Index has returned to the greed level, now at 64. We may see extreme greed after the major earnings reports coming up next week. Here is the earnings calendar highlighting the most anticipated earnings reports for the week beginning October 28th. And these are the earnings that I will play for this week after close on Tuesday. AMD, Alphabet, Snap Inc. After close on Wednesday. Microsoft, Meta, Coinbase, Robinhood. After close on Thursday. Amazon, Apple, Intel before open on Thursday. Uber. Now let's take a look at the key events for this week. There's nothing scheduled for Monday, but on Tuesday we have CB consumer confidence and JOLTS job openings. On Wednesday, we'll get the ADP non-farm employment report and Q3 GDP data. Thursday brings the PCE index and Chicago PMI, but the most important reports come on Friday, the unemployment rate and non-farm payrolls. All right, ladies and gentlemen, that's all for this video. If you found value in it, please like and subscribe. If you have any questions, drop them in the comments below, and I'll get back to you as soon as I can. Thanks for watching, and I'll see you next time. Bye for now.